And joining us for a further look at what's playing itself out in the market scene is Viv Govender from Rand Swiss Offshore. Viv, a good afternoon to you. Thank you so much for your time.
Thanks for having me.
All right, Viv, it does look like we are seeing green screens all around. Keen to get your thoughts on what could be driving market participants today. We do know that we're all waiting with bated breath to see what will come out of the MPC.
Yes, I think at the moment, the market basically has been reasonably, positive for quite for a little while now, for the last couple of weeks or so, ever since we saw, inflation numbers in the US come in lower than anticipated, and also similar numbers coming in from Europe and also from the UK. I think right now there is an expectation that we are going to be seeing, a bit more dovish position coming through from the US and from other parts of the world as well. And that's actually helping markets quite nicely. Obviously in the US, obviously it's Thanksgiving today, so that's obviously making a difference. And that might be just something that we're seeing right now where there's not too much action happening in the market, and therefore, we're kind of drifting higher just on the overall positive news.
Let's talk about your expectations for our MPC today, Viv. What are you anticipating there?
Should be no change. I do think that if there is a surprise, it won't be a cut. It would be very unusual for the Reserve Bank to cut, especially when we had the last inflation figure coming at just below 6%, and the upper band is 6%, and before the rest of the world is cutting. It would hurt our currency, it would make inflation go higher because, if the imported goods become more expensive, the currency gets weaker. So overall, I don't expect any kind of cut coming through. And, raising right now, I don't think is probably the right idea. A lot of the stuff that's coming through with the CPI number, like for instance, the food numbers and so on, are temporary measures that are going to disappear. And I do think we are going to be seeing oil prices and the stronger rand helping us with inflation in the next couple of months.
I'm also keen to get your thoughts on the rand. We are seeing it around the 1870 market. We've seen it do better than this in recent weeks, but of course a bit of a discrepancy now. Viv, keen to get your thoughts on that one. What could have happened with the rand, or what is currently driving this performance?
Yeah, look, I think it was that inflation number was a bit surprising. We were expecting a little lower inflation than that, which is obviously not great. But I do think that, yes, it has been a bit stronger in the last couple of months, or a couple of weeks rather, but also a lot weaker as well in the last couple of weeks. Us breaking back through the 19 level and, getting below 19 was, I think, a key number. We got as low as about 1830, 1820 or so. I think if we see some more stability in the market, I think especially if we see inflation, moderate a bit, I think we'll be more in a better situation in terms of the rand going forward. And remember, the more stability there is, the better the rand looks. The better the rand looks, the more stability we get, because it obviously helps with inflation.
I'm keen to get your thoughts on some company news. Yesterday, after the markets closed, we would have heard announcements on some changes in our banking sector with regards to Jason Quinn moving from ABSA to Nedbank, from financial director to CEO. What are your thoughts on this one? I do see the Nedbank share price is up 2%, so it looks like markets have received the information well.
Yeah, look, I don't know about the sort of planning strategy that these banks are having. Yes, competent individuals, I don't have any doubt about their capacities, etc., going forward. The only question I have is that this is a very, this is a market that's due for disruption. I've always, felt that the financial sector is really due for disruption because of new technology. We're using the same systems we were using when we were using punch cards back in the day and stuff. You know what I mean? Now with online banking, with all the kind of stuff that's coming through, that the new technology is coming through, I think that the situation in Africa is ripe for somebody that has a more of a a high tech, more futuristic view. And we saw that with Michael Jordan back in the day at FNB. He was really able to gain real advantage over his competitors just because of his forward-looking strategies.
Very interesting take you have there for us. But let's also touch on Mr. Price. That share price is up, I think, more than 10%. So even though, the results aren't as good as Mr. Price often looks, it looks like investors are satisfied with what they've seen. Keen to get your thoughts on this one.
Yeah, look, load shedding has been obviously an issue. And every time we talk about any retail in this country at the moment, it's load shedding. And I think we've seen a tick up again the last couple of days, which is very unfortunate. They said there are 60,000 hours of load shedding, which is about almost 200 million rands in revenue. They're also spending another 140 million to acquire backup systems. So all these factors have come into place. But I do think going forward, in a couple years so's time, what you're going to be seeing happening is a lot of these companies now accept the fact that load shedding is a factor of life. You can't basically just wait and hope until Eskom gets its action order and everything gets solved. In that scenario, it's actually better because what happens is you're more willing to spend the money that gets you out of this hole. Basically, have your own power supplies, your own backup systems, etc. And I do expect, in a few years' time, you're going to see a lot of the companies that can afford to, and a lot of the people that can afford to as well, to effectively get off the dependency on Eskom.
Could Mr. Price benefit from more credit sales, Viv?
Look, I think it's possible. The thing is that with Mr. Price, it's kind of a weird company. It's not so much a company that, even though Mr. Price is totally cheaper clothing, is not the more high-end stuff. It's generally cheaper clothing for wealthier people, if you know what I mean. So it's the guy that buys the expensive stuff. When he wants to buy everyday stuff, he buys from Mr. Price. It's not the poor person buying the everyday stuff from Mr. Price. So it's a slightly different kind of market that they deal with.
And then let's talk on Woolies and that remuneration policy and what's happening there. We are seeing executive pay, being further and further thrusted into the limelight. And I'm wondering if Woolworths is any different in this regard. I understand the case against the pay, but I also understand the case for it. What are your thoughts here, Viv?
I think if you made basically shareholders' money, then you should be rewarded. Because and Woolworths over the last, say, several years has done reasonably well, you know what I mean, in terms of performances and so on. Up about 30% in the last 5 years compared to some of the competitors. That's reasonably good, but 30% in 5 years is not exactly blowing the lights out yet. So you can't expect to be rewarded super great remuneration if you do 30% in 5 years. Like better than some of its competitors, but still as an absolute level not very good. And this is over a 5-year period, so it's not like a 1 year, blip in the radar.
Now, Viv, I'm keen to get your stock pick in a bit, but first I'd like us to reflect on counters that have found favour with your industry peers.
I'm going for Puma, and it's a very contrary share to what David would normally choose. This is a top left to bottom right share price, whereas David normally goes the other way around. But it just looks too cheap. I mean, it's gaining a little bit of market shares. It's got a few problems in the US. It's been a bit of a laggard there. But at this valuation for a brand like this, I think it is just cheap, and you should get a half decent return out of it over the next year or two.
I listened to Jensen Wang on NVIDIA and after their results. And as he said here, he said it, I didn't say it, he said the era of generative AI is taking off. Now that's him, not me. So when someone who runs this billion-dollar company, multi-billion-dollar company, tells you what they're going to do and where they're going, I've got to believe him. I know the shares are down now, but when you go through his presentation and when you go through his transcript or listen to what he says, you'll see how this industry is changing. And you can't ignore it. It's going through different stages, but it's far from over. In fact, it's only beginning now. And the way that businesses are going to position themselves, the new businesses coming in. So I still think this is going to be the theme that's going to dictate markets next year, even though the share price is up 250% this year.
I picked AVI. It's got a portfolio of very strong brands, Baker's Biscuits, Five Roses, and I think it's therefore in a strong position to service consumers' needs, and its brand portfolio covers food as well as clothing, and especially on the food side, it's able to service a range of consumer income levels. So it has a broad catchment of consumers in varying income categories, and it has exceptionally strong cash flows. It has a history of declaring special dividends every few years. Current dividend yield is around 7%, which can be considered quite attractive for such a well-run company. And I think the outlook for AVI is positive, considering that during the course of 2024, interest rates are likely to be lowered, thus supporting improved consumer spending. And in the category of cyclical counters, AVI can be considered more defensive, but nonetheless still a beneficiary of lower interest rates.
All right, Viv, keen to get your thoughts on some of those counters. We have Puma, NVIDIA, as well as AVI.
I like NVIDIA. Look, I mean, we've seen, obviously earnings go up dramatically, but the market expected it, so it wasn't too much of a surprise coming through. This company seems to have, at the moment, an unassailable lead in AI. And, as David mentioned there, we are seeing more and more money going towards this particular thing. I mean, to give you an idea, I think Microsoft is planning to spend something like $50 billion over the next year or so on AI. Now, to understand what that means, this is, over a year period, the biggest single investment of anything in human history.
Sure.
They're not talking about any company, they're talking about anything. Any country, no country has spent this much on infrastructure in human history on a single product, be it the railway services or the space shuttle or the trip to the moon. Nothing came close to $50 billion in a single year.
Sure.
And so this just shows the commitment that they have towards this new technology.
I'm very keen to get which counter you like as well today, Viv.
Okay. Also in the AI space, I'm looking at Alphabet, which goes from Google, Alphabet/Google. They also have an AI system, a division called DeepMind, and they're set to release their new program in the next month or so. From all expectations out there, it's said to be significantly more powerful than current systems. And if we see what the reaction to Microsoft, etc., doing a good system or doing a positive surprise in AI does to the share price, we would expect something similar to happen with Alphabet as well.
Very interesting times ahead, Viv. Thank you for your time this afternoon. It's always a pleasure speaking to you. That was your midday markets update with Viv Govender from Rand Swiss Offshore.